Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening on Wall Street. I'm Greg Greenberg, here with Jim Cramer on options expiration, China rebound, Dow record day. It's a good tape, isn't it?
One of the things that's happened is there's a remarkable coalescence of what I regard as being negativity. We have the least retail participation. Schwab just this morning cut fees again. It doesn't matter. It's not attracting them. Retail's pretty much given up on the stock market.
We saw that from E-Trade and Ameritrade.
Right,
exactly.
and one of the reasons why is because there's very little enthusiasm for the market, which is one of the reasons why it's propelled high. The shorts have obviously their record highs again. There's a sense that cash is better than the market. The only people who believe in stocks are the managements themselves. So there's become and again, this is not supposed to happen, a supply problem. There's just not enough supply. So when we do have an expiration that's biased to the upside, coupled with some very good earnings during this April season, you get this kind of monumental move where stocks really do break out to new levels. And when they break out to new levels, and I continue to think that will happen, eventually retail will be brought in. And only until then will we be putting in a top.
Let's talk a little bit about options. You often write about the phenomenon called pinning.
Right.
And it seems like if there was a stock which was stuck at 37.50, it was going to 40. Right? For example, Johnson Controls, 97.50, now it's going to the 100 strike. They're gravitating towards the higher strike.
What's happened also is that we have, with the exception of General Electric, a number of stocks that people thought would settle at particular prices. So therefore, I mean, if you look at the Caterpillar, there was an equal number of calls and puts being at 70. So if the stock did go to 70, you would sell the common against the call and be able to lock in a short. And then when it dropped to 69.5, you'd sell the put. The guy would buy the put and then buy the common to be able to see if he can get some upside. That arbitrage got blown up by a lot of the great earnings. And it's right now, there's still some that are being contained. They're trying to contain Honeywell, trying to contain Schlumberger. But you also saw some remarkable breakouts. I find that these breakouts, we must emphasize this, tend not to be repealed in the weeks after.
Okay. Honeywell, as I said, 47.50. It's at that 50 strike.
Right. I told you Boeing could be great.
You were talking on Real Money about some lottery tickets which paid off.
Yes,
it's
indeed.
a good week for lottery tickets.
Yes, it was.
You look at Caterpillar.
By the way, the way lottery tickets works, I'm glad you're referring to it, is that you tend to get a lot of rip-ups. A lot of things don't work.
It's like at the track, the long shot.
Right, but take a look. Cat goes up 7 times your money. Schlumberger went up 3 times your money. You got a double in Toyota Motor. And that makes up and then some for all the rip-ups. And that's how you have to view that. I always look at it not as you got to be 70 or 80% right. You have to be 30% right. But the 30% right will easily take you and make you a lot more money than you've ever lost.
Quick final question. If earnings start slowing, are these lottery tickets going to become less attractive in future quarters?
Well, I mean, the best
less upside beats.
Let's understand that the best lottery tickets are coinciding with the options expirations that also have to do with earnings season. So, I mean, I was particularly aggressive on the site on realmoney.com because I felt that because of earnings look good. You could really have the double whammy, and we got that.
And we're getting it. Jim Cramer, Greg Greenberg,
Thank you.
Wall Street Confidential.